This podcast is for informational purposes only. It is not intended to be financial or investment advice. Seek a licensed professional for investment advice about crypto or any other investment. Welcome to the Blazing Crypto Podcast. I'm Brandon, and today I'm joined by co-host, the man, the chart king himself, the man who bought the release of Solana in August of 2020. Justin, how are the charts treating you this week?
They've treated me better before, but I'll take it this week. It kind of depends on what chart you're talking about.
Very, very good. So we're excited to launch this new podcast focused on helping you grow wealth with crypto. And, Justin, we have to say here at the outset, the people want us to say that we're not financial experts or wealth advisors, and our opinions should not be taken as financial advice. In fact, sometimes we like to say we offer not financial advice, right? But with that being said, we're excited to offer our insights and analysis about what we think is important with crypto, how to understand why the space works the way it does. And overall, Blazing Crypto is going to offer a lot more than just a podcast, but more on that in a bit. So, Justin, we started planning this podcast a few months ago. Hard to believe we're already in November, but in reality, it's really been 4 years in the making in some way. We both started in crypto in 2017. Actually, technically, I was on the first couple of days of 2018, which is a funny story in and of itself. But Justin, actually, you're the person that introduced me to crypto. So just sort of curious here, as you think kind of about the early days and kind of us getting started, what sticks out in your mind?
I think the big question to me is like, okay, how did we make it this far? There were many pitfalls or like potential pitfalls along the way. And, even as we get into this episode, I'm sure we'll break out a few of those crazy stories. But I think like if I look back at the whole time, one of the big things that stands out to me that's very exciting is the fact that, back in 2017, all of these different coins and cryptocurrency was mostly just ideas. And today we actually have like a lot more than just ideas. Some of those projects made it all the way through, and now they're actual, they have products, they're actual companies and new technology that's developing. So I think being able to see that whole picture has been a really cool experience.
Yeah, and in our conversations, which have been many over the last few years, we've had that thought of where it's like we've talked about what might be for so long. To actually see it happen has just been a wild experience. And the innovation in this space is, we say it all the time, it's just wild.
Yep.
So like you mentioned, we have been through ups and downs. We've had our fair share of wins and losses, to use all the cliches. We won't name names, we've had coins go to zero, which we will name drop probably along the way. And, we've discovered gems like Solana, and boy, what a gem.
Oh, yes.
What a gem. We might devote an entire show to Solana here in the coming days. Justin, PTSD alert, but we've even gone through an exchange getting hacked and us not faring super well in that. However, we've learned a ton along the way. And even as we were recounting some of these stories, even just realizing how much we've been able to learn, thankfully, even through some of the missteps. I think what's really intriguing about kind of our conversation is, and our sort of relationship with crypto is, as fun as the space is, you and I have been really motivated, energized by just being really curious about wanting to understand why behind crypto, like wanting to understand, what people like, Raoul Pal would call the macro, right? Like understanding the bigger picture. Why does this space work the way it works? Where is it going? What do you need to know to actually have success with crypto? Because frankly, if you're not careful, this space will chop you to pieces. So the idea for this podcast and really Blazing Crypto as a whole really began organically for us, right? We didn't start out 3 years ago to build some podcast, But it began organically when friends and family that we have began to ask us questions about crypto. They wanted to understand it. They saw news breaking. They wanted some just help figuring out how to connect the dots. And try to say this humbly, but people began, leaning on us for insights and feedback, and really we're looking for help from our point of view. And all in all, it's been a fun ride, but Blazing Crypto is really about being able to enjoy that ride with a lot more people. So,
Yep.
What do you say? Let's go.
Yeah, let's do it.
All right. So our main segment today is focusing on an item that is near and dear to our heart. We call it the Core Four. And so, in addition to the fact that obviously it rhymes, and people say you're supposed to do stuff like that, the Core Four is really our best effort at distilling what we think are the four most important things that everyone should understand about crypto. Again, about why it works the way it works, and really what you need to understand in order to sort of find your place along the spectrum, find your place, whether it's as an investor, whether it's as a user, someone that's playing, a game on crypto, or whatever the case may be. So these four items, again, in our learning, in sort of the paradigm and model that we've been able to build, these four items really are like a sort of a North Star for us. And I would even say, Justin, it's kind of funny how many times in conversations that get very specific and we're trying to make a decision, something in our conversation always comes back or seems to come back to one of these core four items.
Yeah. Yeah. Yep.
Yeah, so let's dive in, and we'll have you explain some of these and tell people why they're so important. So the first item on the list, and again, we try to have fun with these, right? The first item on the list is honor the king and queen. So tell the people what on earth that means and why that's so important.
Yeah, so the king and queen, if you had to guess, you could probably guess that it's Bitcoin and Ethereum. So, honoring the king and queen, what that looks like is it's essentially like having a core position in Bitcoin and Ethereum. Like you always want to be building your Bitcoin stack or your Ethereum stack, or maybe a little bit of both. And I think, there's many reasons why it's so important, but one of the biggest ones is just that crypto is very volatile and risky, right? And there's also thousands and thousands of coins, and if you start counting NFTs, okay, now we're in the millions and millions, and a lot of them will come and a lot of them will go, but the king and queen that are here to stick and stay around is Bitcoin and Ethereum. So, there was a time like early on when we first got into crypto, we were, I don't know if Brandon can say this, but I was jumping it all in on coins like, this thing called Mothership, MSP, that's no longer around, or like
too soon.
There's there's tons of them that I was throwing money in 2017. It's like, I got to invest this technology, and they're not even around anymore, right? So Bitcoin is not going away. Ethereum is not going away. They may, change over time, but they're not just going to disappear tomorrow.
Yeah, absolutely. And even I was trying to look it up. The name escapes me, but there's a law that basically states that if a technology has been around for 10 years, it's reasonably certain, to caveat that, reasonably certain that it would exist for another 10 years. And we've seen that proven true over a long period of time with many kinds of technology. Obviously, Bitcoin is already there. Having started over 10 years ago, Ethereum is sort of is getting closer, not quite to 10 years. But yeah, exactly. These two dominate the space. We've also joked that we reserve the right to change these and either add a court jester, as we've discussed, or even think about a deck of cards, a jack for Solana. Or maybe Solana becomes the king or queen. We will see. But we reserve the right to change these as the market shifts and adapts. All right, great. So the first item on the core four is honor the king and queen. The second item is understanding the Bitcoin Lifecycle. So Justin, take it away.
Yeah. So um, there's there's a number of reasons why understanding the life cycle is so important, and it really understanding the whole life cycle and of being 4 years. Typically, Bitcoin goes through a 2-year bear cycle and a 2-year bull cycle, and then back into a bear market, and then back into a bull market. Well, if you have the big picture in mind, you're able to have a lot higher conviction, especially when like the Bitcoin price drops by 30%, right? Or 40%, or heck, it dropped 56% this summer. That can be very just hopefully not earth shattering, because it depends on how much money you have in there, but it can really shake you to your core. And zooming out, having that 4-year time horizon really helps you stick to the plan. It also, I think one of the big things is like, let's say Bitcoin drops 50% one month and rebounds 30% the next month. The more you can zoom out and see the bigger picture, you're going to see that, okay, Bitcoin averages 200% growth per year since it was created over a decade ago.
I
So
hear that that's a lot. Is that a lot?
yeah.
200%?
Oh yeah, just a little bit. Yeah. It's like literally Bitcoin has outperformed the world, anything you can possibly think of from an investing standpoint, consistently, for the last decade. It's not even close. But yeah, so like knowing where you're at in the cycle is really important. Like, okay, when should I be buying Bitcoin or Ethereum? And then also, like, when should I be selling? If you don't know where you're at in that market cycle, it's really hard to know how to, like, you know, tie that down to, okay, what actions do you need to take today? So I like, I mean, it's almost like a way to really, it's like a map. It's how we navigate through just life in crypto.
Yeah, absolutely. Absolutely. It reminds me to connect to the stock market for a second. I mean, we've all seen the chart, and actually, it came up in my feed this morning of back to the 1800s of the stock market's history. And essentially, the further that you zoom out, again, it seems like an inevitability. The thing always goes up, right? And kind of the joke about stonks, stonks always go up. But the application there, like that's not just some cool thing. Like the application there is if you've ever sold at the bottom of a 20% or 30% stock market correction, you got buried. However, if you've bought those dips, so to speak, I mean, you're like, you're rewarded within a year or two, sometimes faster than that. So yeah, absolutely. The further you zoom out, sort of things become a little more clear. And actually, Justin, to dig a little bit deeper here, we've actually said that for the volatility that Bitcoin has demonstrated in the entire space, Bitcoin is actually a lot more predictable than people realize. Not predictable day to day or week to week or even month to month, but predictable within that 4-year historical time frame. So
Yep.
anything else to add on the predictability and kind of why orienting yourself within that 4-year time frame is so important?
Yeah, and I'll try to stay out of the weeds of like, all the reasons why it's so predictable. That's like a whole nother podcast for another time. But the essentially the supply, for example, in Bitcoin is fixed, right? Like we know what the supply is going to be. Now the demand shifts wildly, obviously, but anytime you have like a fixed supply like that, and then the demand shifting dramatically, like let's say the demand drops significantly, events like that in the crypto, just the crypto industry are very predictable and tied to Bitcoin. For example, like when Bitcoin miners start selling off their Bitcoin in order to pay for fixed costs, they have to do that on a regular, basically calendar basis. And so you can sort of like see the demand shifting in crypto very easily. And I think that's part of the predictability that I like to
That's
highlight.
good.
But
Yeah, and what's even wild about this space with and I'll stay out of the weeds of on-chain analytics, but what's been really cool to see also is we can see really who's buying, right, or who's
yep,
selling. And so even this summer when Bitcoin, dipped down briefly below 30K, was sort of bouncing off of 30K, kind of the phenomena we were seeing on chain was that the whales were
yep,
actually slowly reaccumulating. Again,
right.
signaling a lot about where we were, and understanding who's buying and who's selling really does give us a really strong indication. As you said, a lot more to say on that point, but to summarize, anytime we're thinking about money in or money out or moving money around or whatever, we always want to orient ourselves on this historical 4-year time frame.
Yep.
And as the space continues to evolve, we'll see what happens with that 4-year time frame and whether that gets extended. But again, more to say on that later. There are some smart people out there with some different ideas that we are staying very close to. So honor the king and queen first. Second, understand the 4-year Bitcoin historical life cycle. Number 3, Justin, is make DCA your friend. So tell the people what DCA is and why it should have the status as your friend.
Oh yes. It should be your everything. It should be so much more than a friend. So, and this one goes along with the understanding of the life cycle as well. They kind of work together. But DCA stands for dollar cost average. So what that means is like Brandon and I dollar cost average. Well, yours is a little different than mine, but like I was every Friday all summer long, I was automatically buying Bitcoin, Ethereum, and Solana, and it was automatically drafted out of my account onto Coinbase, and I didn't have to look at it, think about it, and it was little, smaller amounts basically every Friday because I get paid on a weekly basis. Well, that's dollar cost averaging, and to make a long story short, that can have the most powerful effect on your long-term growth and portfolio. I know Brandon has his own story of dollar cost averaging and how much, like, yeah, it just adds up. If you're buying even just a little bit of Bitcoin over a 3-year time horizon every Friday, and that price of that asset is ultimately going up at 200% a year, like that adds up very quickly. So during the bear market, which by the way, the bear market is also your best friend. We have lots of friends. So during
There's a lot of room. There's a lot of
yeah,
room on the bus.
like when there's a bear market, which just means the whole world is selling their Bitcoin and everyone says this thing is stupid and it's going to zero, that's when you need to be dollar cost averaging in. You need to be buying every week. So like I should say like that's been like I think the most effective strategy for you and me. And then also, when everyone on Facebook is talking about Bitcoin, and it seems like you're seeing Bitcoin ads everywhere, and it's like, oh, the whole world wants to get its hands on Bitcoin. That's actually a signal for me to okay, now I'm going to start averaging out of the market. I'm going to start selling, and just like I dollar cost averaged in, I'm going to dollar cost average out. I'm going to be selling on a regular basis.
Yeah, and the fact is, to pull a few things out there, the fact that you don't have to buy one whole Bitcoin, right? Because how rich, it's 61K
Yeah.
today. The fact that you can buy Bitcoin and other crypto assets fractionally is really a game changer. And honestly, we even love that from what it does to really push the accessibility down to like literally anybody with a cell phone. Like if you can buy a T-shirt or a lottery ticket, you can buy Bitcoin.
Yep.
And so one thing we talk about with DCA is avoiding an all-in or all-out mentality. So we're never really like moving all of our chips in at one time or moving everything out at one time. There is that, like you said, that approach of scaling. Yeah, I'll relay that story, and I use this story as a model. I did not do this, which is what makes me remember it so well. So if I was telling Justin, I have one of those mechanisms where like every week X amount of dollars comes out of my checking, goes into savings, and just like sits there and does nothing, makes like 0.007% yield. You know what I mean? I'm actually, lost money or lost buying power in the last 18 months over every dollar that sits in that account, just like you have. But if you would have taken $25 a week on Friday, don't look at the market, doesn't matter what price is, you're not trading it. If you would have put a $25 amount into Bitcoin every Friday, beginning with January 1st of 2019 to December 31st of 2020, so roughly a 24-month time frame, you would have had somewhere in the neighborhood of $20,000 to $25,000. And that doesn't even count the big Bitcoin run up to 64K in April or May or whatever it was. That's just like barely getting into, we were approaching, 19 or 20K, the new all-time high.
Yep.
And so I think the point is, and this to me is one of those mental model things that's really, really important. I'm not smart enough to trade this market. And I have to admit that and know that. And like knowing that is actually a benefit. And I think most people are not smart enough to trade this market. It's too volatile. It's still really early, right? And so it's almost trading this market is almost like sort of arguing and debating about which seat you want on a rocket ship. The point is, the mistake you would make is not being on the rocket ship. Again, not financial advice. The point is, DCA is a way to get on the rocket ship. The thing I love about dollar cost averaging the most is how much stress and energy and decision making and just the frustration of all of that just kind of decision complex. It really takes that off the table. And honestly, it focuses all the energy, I think, on like pick the right asset, which is why, again, historically we've recommended dollar cost averaging into Bitcoin, Ethereum, Solana, even USDC. So yeah, anything else to add there, Justin?
Yeah, I think the only thing I would mention is like Bitcoin. If you look over the last several years, it spent I don't even know off the top of my head how much time. It basically spent a year to a year and a half under 8K. Definitely under 10K. And so when you're doing this DCA buying method, I don't care where you bought. If it was under 10K, you're buying in the right spot. It doesn't matter if it's 8 or 3 or 4. Because when you zoom out, and Bitcoin's at 60,000 a day, you don't look back at those buys with regret. And you have a lot of time to accumulate a lot of buys. So
one of the best things that I can tell you that Justin's ever told me, Bitcoin was at, I forget what number it was. It might have been 7,500. And I was like, well, do you think I can wait till it dips down to 6,800? And it's just, again, if you think that this thing has 6-figure upside, which obviously we do, and even higher than that, the difference between 6,800 and 7,500, it's not even worth the time to think about, right? So again, keep the big picture in mind. Don't miss the rocket ship, and DCA is really the friendliest way to do that. All right, we'll speed up a little bit here and go on to number 4, our last of the core 4 items, and the famous phrase, protect the asset. So protect the asset, Justin. Tell the people why that's so important.
Yeah, so I think Brandon already mentioned there was an exchange hack that we endured. Well, the funny thing was I actually didn't lose hardly any money because I happened to just move it off to chase some squirrel coin or something, probably it was probably Doge or something. But we were on this exchange called Cryptopia, and it was a complete scam. Basically, the creator of the exchange, they just stole everyone's money and moved to Sweden or something. I don't even know where they went. Yeah. And then Brandon and I got all these emails for the next 3 years. I think we got one actually.
I got one this week.
Okay. Yeah. 4 years later from some, police or something. It's hey, we're still working on this hack. If you want to get your money back, you got to fill out this form. No.
Not going to make it.
And On another note, I had a friend that had 10 Bitcoin sitting on Cryptopia, 10 Bitcoin at one point in time in 2017. So he did not lose that to that hack. But anyway, so the main thing there is there's a lot of sketchy places that you can put your Bitcoin on the internet, and you want to avoid that. So stick to some of the major exchanges like Coinbase. Voyager is another good one. Gemini. You can even do it through PayPal, Cash App, places like that. But you want to keep your coins safe and secure on a very legitimate exchange. I know that I actually, when I was doing some research on this, Coinbase in 2020 had 0.004% of their accounts hacked. And of that sample, it was like the person's fault 90% of the time, right? Like they did something stupid, like, gave their passwords to a friend or something like that, and then whatever, got swindled. But the main thing there is you want to keep your coins in a place that's safe and secure, insured, and also where maybe you're earning some interest passively as well.
Yeah, that's really good. We've said before, and it's worth repeating that it's hashtag analysis here. You can't build long-term wealth if you lose your crypto through negligence or a risky exchange getting hacked. So be safe out there, right? And I think what's worth mentioning here is there's actually another way to sort of not lose your crypto, but lose your value. And that's actually if one thing we say is, if you make profits. Justin, finish the sentence.
Take profits. Take them. I have never regretted taking profits.
Yeah, and one of the things that we try to free our mind from is this idea of like no one sells the top, no one buys the bottom. Bitcoin is not going to send you a trophy for selling, the top 1%, right? The point is, again, on our side, like if you have profit, it's a model called selling into strength, right? So while the entire world is lining up to buy Bitcoin, that's actually the smart money. Historically, the smart money is selling Bitcoin, right?
Yep.
So again, you have to protect the asset, right? Be smart out there. Avoid the greedy instinct, and really this it actually gets to honestly trading this market, investing in this market, kind of becomes more about knowing yourself.
Yep.
Not just about knowing crypto. And again, that's an entirely different podcast.
Yeah.
By itself.
No, that's a good point.
All right. Well, as we wrap up here. And again, thank you for bearing with us. My voice is as congested as the Ethereum network is at the moment. So thankfully the gas is not as expensive. But if you like what you hear, you want to grow with us, subscribe to our podcast on the platform of your choice. Give us a rating. Give us a comment. Any support is appreciated. Again, we started this to help more and more people grow wealth with crypto. In the coming weeks, we're excited to continue building the podcast, rolling out new episodes, but also stay tuned for some new offerings. This is really just the start, and honestly, we could not be more pumped about it. So for Justin, I'm Brandon. Thanks for joining us on the show today, and we look forward to blazing a new path with you. We'll see you next time. For more information, check out our website at blazingcrypto.io. Additionally, if you have friends that are new to crypto, share our trailhead videos from our website, which is a great way to get introduced to crypto.